Hey everybody, welcome to the Ankerstar Wealth afternoon show. We couldn't get it out this morning, too many fires to put out, but have a couple of good topics for today. The first of which is going to be like, what is this green? Finally, I think Mike will go in depth on it, but I think he said it's like 10,000 days in a row it was in red, something like that. He'll clarify that for us, but it was nice to see some green. If you happen to be following the Bitcoin trade, halving happened, if you're familiar, that happened this weekend. So we're on the other side of that now and got a nice green day. We'll see if that holds. I mean, all the arrows point that it will. But in addition to talking about the green stuff, we were going to talk about the Blackstone stock, which if you're familiar with Blackstone, I kind of modeled my company after this. Their CEO started with $400,000 of other people's money, and now they're managing, kabillions, if that's a term. I started with the same amount. We're on our way, right? So he started earlier than me. But we'll see where it all goes. But Blackstone is the largest private equity firm in the world. We do BCRED, BREIT, some real estate investing, private credit. There's a hedge fund portion that's out now. Nobody's in it yet. But those are the things that we're looking at with Blackstone. But we also hold the common stock in our model. So that's topic one. I'll transition to Mike. He's going to talk about where we are in the market quickly, but then go over to something that affects every single one of us, and that's cell phone coverage, right? Most of us are either Verizon, AT&T. There's T-Mobile people out there, I guess. I've never been one. But he's going to show us where those stocks are and do a little bit of a comparison for you. But it was a financial education presentation. So you have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. These opinions are Mike and mine alone. Let's share out Blackstone. Ticker is BX if you're following along in your own portfolio. Let's go window, and there we go. Should be seeing that. So again, it's after hours now in our afternoon version of the show. But yeah, it was up 3% today. Yeah, so the whole market was up. The NASDAQ was up too. But really what I wanted to show you is this is the 1-year chart, and we saw consistent move higher until it hit this year, and then it kind of leveled off. My point is, don't lose faith in the best of breed stocks because they can't just go up all the time, right? They do have to reset. And, the first quarter was straight up in the market, and Blackstone went sideways. When you think of private equity, you can think of, okay, when the market's on fire, money flows into the FOMO we talked about, right? Money flows into the market, and things that aren't market correlated tend to, the money goes out of them into that. So now that we're seeing some of the volatility in the market, I do expect Blackstone to start getting more and more love, not only their private stock, their stock, public stock, but also their private equity investments. But what I want to show you, often people ask me, what are you looking for in a stock? Well, to value a stock down here, you often look at that PE ratio. Well, I start with earnings. Are they profitable, right? Not all of our companies are. Sometimes they're on a road to profitability, and that's where you want to invest in them. But certainly a company the size of Blackstone, you see, okay, 43 PE, you're like, well, that isn't that expensive? It's like, well, it depends. If it were tech, it'd be cheap, right? But they're not a tech firm. They're really a big investment bank, if you will. So 43, I'm saying that's about right. But when you look at the forward PE, you see at 25. So what is forward PE? Well, you kind of have to, so that's the next 12 months. So to get that information or understand what that means, is you need to go down to the earnings tab, which is here. They just had earnings last week. It was kind of a blah yawn. Nothing happened. They came in at 98 cents a share and beat consensus of 96. So really kind of a nothing, didn't really move the stock. Wasn't a surprise one way or the other. If you see these arrows, these are the surprises, good or bad. Companies every now and then have a bad surprise, right? But they're trucking along. They're doing everything they say they're going to do. Why is that important? Because that helps you build trust in what the C-suite team is telling you about what's going on in the future. And they're projecting a very profitable 2024, and then followed by another very profitable 2025, which there is some cyclicality that I won't even pretend to understand. But you do see that quarter over quarter, when you compare each quarter to the following quarter, it's a pretty significant move up there, at least in the first three there. So expecting big things out of Blackstone. I still think it is cheap here. No thanks, daughter calling. Get back with you. But yeah, that's what we have for Blackstone stocks. So very excited about it. They are the trusted name. And the people always ask when you're invest in a financial firm is like, well, what happens when, you get a recession? It's like, well, these are the people that have the briefcases with the cash to show up and buy distressed assets, right? That is where they kind of make the most money. So, a firm like this is not scared of a recession. They don't really want it because that means bad things happening to everybody. But they're positioned to take advantage of it if that does happen. All right, I'm going to bring this down, and Mike, turn it over to you. What is this color we're seeing in the market? Why is it happening, and what's going on?
Look at this. We love to see green. It was last week was just painful. It was red, 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 and this is the ideal amount of green we want to see. We want to see green in the Dow Jones, S&P, NASDAQ, the Russell 2000, and we want to see that red at the end, which is the volatility index. And you can see the volatility took a big drop. And then, of course, the other green we really want is in the crypto with Bitcoin. But we're just going to focus on the S&P 500. Click on that graph, and we can see that, and I'm just going to show I'll show a 1 month graph to see that it's dipped down. But then just one day, let's celebrate. Hey, it was up quite a bit. It came down a little bit towards the end of the day, but overall green, green, and green. So we like that. We hope that carries over. This last week, things kind of dropped 4 or 5%. That was as expected. We're still up on the year. It's not like we're down, but it's painful when we go through it. I was kind of thinking of an analogy with that. Is it's kind of like when the sun comes out and things kind of they get nice and green. You want things to grow, but hopefully we've trimmed the weeds around the edges. So that's our goal. Get rid of that so it can just grow in the green. So that's our goal for this spring. So the other thing, and Steve was talking about phones. So Verizon came out with their earnings today. This is not a stock that we have in our portfolio as far as our models, but Verizon missed slightly. So their stock was down about 4.5%. You can see red. But what I'm showing here is a 5-year graph of Verizon. And that's kind of a painful graph to look at. I guess one sense you could say in the good side, didn't take a big dip in COVID, the COVID year, but it's taken a dip since then. I'm glad we're not in this long term because it's kind of went down for the most part. The one thing, and I'm going to scroll down and show kind of what Steve was showing as far as the PE ratio is 14. So very low PE, low expectation of growth. But when you're in a stock like Verizon, or I'm going to show a couple other ones, what you're really looking for is the dividend on this one. And the dividend is paying 6.89%, which if the stock just ran flat, that would be okay. That would be a decent dividend. But when you look that it declines, that's really not that great a dividend. So that's Verizon. So you may be a user of the Verizon phone, but let's take a look at AT&T, which that's actually who I use. AT&T, same thing, kind of ugly. 5-year graph, down, down, and down. Dividend 6.81%. That's low. PE ratio 8.3. And I'm going to show a chart here that shows the market share of Verizon versus AT&T. Verizon is actually the red, AT&T is the blue, and that green is T-Mobile and Sprint. So you can see AT&T is actually about the same, a little bit bigger market share, PE quite a bit lower than Verizon. At a quick glance at the fundamentals, it seems like AT&T would be a better investment, but like I said, they're not in our models right now. So like Steve said, there is a T-Mobile out there, and it is that green. So it's the smallest market share of the big three there. But let's take a look at it, that graph. Let me get to T-Mobile. And wow, Steve, I bet you that surprises you right there.
It does.
I was going to say, T-Mobile since COVID has doubled, more than doubled. Not in our model, unfortunately, but I mean that's a nice return. Having doubled, does not pay a big dividend, only 1.6%, and the PE ratio 23. So the market is valuing the earnings of T-Mobile quite a bit higher than Verizon or AT&T. I don't know exactly why. I was doing some research on it. It has to do with some postpaid phones, things like that. Maybe that's things that my kids don't do, but maybe some kids do. I know I pay AT&T a pretty good chunk. So, I just want to go back and look at this chart again. So when you look at this chart, you can see a very consistent. I mean, this is since 2011, and you can see that these companies hold pretty much the market share. There was the merger of Sprint and T-Mobile, so now you really just have 3 players in the U.S. market. Anyways, what was the old commercial? Can you hear me now?
Right.
Obviously, you just want to make sure the coverage good where you're at. Would not recommend these stocks unless you're looking for that dividend return. So that's all I got.
All right. Well, hey, that is great information. I'm a Verizon user myself. They didn't have the outage the other day when AT&T had that big outage, just saying. But, no matter who you use out there, these stocks are the kind of stocks that a lot of folks like to just buy and hold forever, right? Not really my favorites, but they certainly fall in that category due to their nice, juicy dividend. And of course, they've been around forever. So that's what we have for today's show. We are keeping our fingers crossed that not only was this a Magic Monday in the green, but that we have now marked kind of a bottom in the sell-off for the past 6 days, and that we can start on March higher. So again, tomorrow will kind of let us know where we stand on that. A lot of the issues that are hanging out there, with the Israel-Iran situation, how's that died down? Has it gone away? We don't know that yet. So stay tuned, if you will. Stay strapped in just in case. And with that, we will see you guys back tomorrow. You have a good one. Bye.